Get ready, guys. Get ready. Big changes coming down the pipeline. The Fed's about to devastate the market. And I hope everybody's preparing. If you're in this community, I'm pretty sure you guys are preparing and getting ready for this devastating decision that the Fed is going to be making. Now, Blackrock, companies like Blackrock and other investment firms, they're paying attention to what is happening in this economy. Why is the Fed raising interest rates? What are the key reasons why the Fed might halt and stop raising interest rates? Well, folks, we may be on the cusp of one of the greatest market upsets in a long time. Okay. Recent information has come out from Rick Reeder. This is BlackRock's Rick Reeder. He sees an epic amount of cash sitting on the sidelines, and he's taking a lead role in this new ETF. Now, for those of you guys who are not aware, BlackRock is one of the largest investment firms on the planet. With trillions of dollars under management, BlackRock has a lot of power. They have a lot of control. And I wouldn't be surprised if they have direct communication with the Fed. Wouldn't be surprised. I'm pretty sure you guys wouldn't be surprised either. So it's really important to be aware of what BlackRock is doing and what BlackRock is planning. Now, before we go into the details on this one, before we get into the weeds, if you guys are stopping by the channel for the first time, please consider subscribing to the channel and drop a like for the video. That definitely helps out the channel and helps to get this information out to more people who need to know about it, who want to prepare for what's coming down the pipeline. Well, guys, there's an epic amount of cash that's sitting on the sidelines, and investors are assessing a slowing U.S. economy and the debt ceiling debate in Washington. And this is what BlackRock is monitoring. BlackRock is paying very, very close attention to the economy, to this whole debt ceiling debate going on in Washington, D.C., and they're monitoring the slowing economy. Now, if there's a large amount of cash sitting on the sidelines, you can bet your bottom dollar BlackRock knows about it. Why? Well, they're probably one of the largest asset managers on the planet. And among assets that they hold beyond, stocks, index funds, ETF management, they got a lot of cash, right? So that's why. Now, Rick Reeder, BlackRock's Rick Reeder, he said he's never seen so much money sitting in cash. Now, this is rather interesting, especially how we've been discussing in many of the previous videos how many entities are actually buying up gold right now. By the way, for the best way to invest in gold or silver, check out the links in the description down below of this video. But they're saying that there's an exorbitant and an epic amount of cash sitting on the sidelines. And this is what was said earlier this week during a BlackRock media briefing at their New York office. So this is rather interesting. And this was part of the conversation that they discussed during. Now, of course, it looks like my neighbors next door are getting some work done in their house, so they're cranking up the saws. Hopefully we can make it through this video without too much of a distraction. But keep in mind, the Fed has raised interest rates, 10 times, 11 times recently? Since early 2022? So what is the Fed looking at in order to get a cue in terms of whether or not they should continue raising interest rates or slow the rate of raising interest rates? Well, they're looking at wage growth. They're looking at unemployment rates. They're looking at housing values, housing sales. They're looking at automobile purchases. And of course, they're looking at the CPI index, the CPI inflation numbers. Well, guys, from a real estate perspective, commercial real estate has definitely slowed down dramatically. All right. So there is certainly a slowdown from that standpoint. More and more, a tremendous amount of people are pushing to work from home. Many companies are trying to force workers to come back into the office, but with an equal or greater amount of force, employees are pushing back and are unwilling to come back into the office to the point where they're willing to quit their jobs, find another job that will allow them to work from home. And there's lots of opportunities right now. And in fact, I'll share some opportunities for, different work from home opportunities in the comment section of this video, or actually in the description of this video. But there's lots of different opportunities to be able to work from home. More and more people are starting their own side hustles and home-based businesses that give them the flexibility to work from anywhere. So companies are actually losing the power to be able to threaten their employees to have to come into the office. Why does this matter? Well, if fewer and fewer employees are coming into the office, why do you need so much commercial real estate? And so this is a problem for commercial real estate, because commercial real estate values are based on how much rent they can generate. Well, if more and more companies are not renewing their leases, or are renewing their leases but are occupying less space, then the demand for real estate is going down. And so that will also affect the values of those real estate properties. The Fed is watching that. Now, we're not really seeing a huge decline in real estate, or in residential real estate. Commercial real estate, commercial backed real estate, different story. But, and when I say commercial real estate, I'm talking about, hotels. I think they're okay. People are still traveling. People are still in need of hotels, both leisure and for business. But you've got hospitals. They're still using commercial real estate. You've got office space. That is, in my opinion, going to be on a decline, if it's not already on a decline at this point. And I don't really see a real reason why I don't see a reason why to expect the office space to decline or to return to the level of demand that it was previously at. So that's going to continue to get worse. You've got retail space. And as we can see, we've seen Walmart shutting down a number of different stores. Bed Bath & Beyond has shut down. Pretty much, they've committed to shutting down just about all their stores. Home Depot released earnings that were really not good. In fact, they were pretty much the worst earnings that Home Depot has released in the last 15, 20 years. So that's not really boding well for the retail giant. Or I should say for the home improvement retail giant. So the Fed is monitoring all of these things. The thing, though, is the jobs market. The Fed was expecting that the jobs market would crumble. They would definitely see a dramatic slowdown. But what really shocked them is that the jobs market has more openings now than they had in the last several months. Also, the unemployment rate is still very good. We're around record levels for the unemployment rate. So the signals and indicators that would show that we have a weak economy are not really showing up yet. In fact, right now, the CPI numbers are actually coming down, showing that inflation is being reduced. But the economy is not slowing down, at least according to many of the different indicators that the Fed is looking at. So in June, what is the Fed going to do? What's Blackrock going to do? BlackRock's gearing up to take full advantage of whatever opportunities are coming down the pipeline. And I honestly think that these opportunities are going to be tremendous. Now, Reader, he said during a recent briefing that he sees a very high probability that a debt ceiling deal will get done ahead of this looming deadline for Congress to lift it or to leave the U.S. facing the possibility of soon running out of cash to be able to pay its bills. Market disruption from the United States defaulting on its debt would be significant. And treasury bills are used as collateral globally, right? So What is the likelihood that the Fed is going to default or allow? What is the likelihood that Congress is going to allow the federal government to default on our debt? I think that probability is very, very low. And if we look at the stock market is actually up today a couple hundred points. If we look at the stock market's pretty much getting ready to rally. Will it rally in the next month, 2 months, 3 months? I don't have a crystal ball that works. I have a crystal ball. It just doesn't work. But if you look at the market behavior and we listen to what Blackrock is saying about how much cash is sitting on the sidelines, if there's already so much cash sitting on the sidelines, you got to ask yourself, what are they about to do with that cash? Now, that cash gets deployed into the equities market. Oh, well, you can expect that the stock market is just going to shoot up. We're already within 6-7% of all-time highs on the S&P 500, NASDAQ, Dow Jones. The market's ready to go. It could run. And with this much cash sitting on the sideline, according to BlackRock, it's definitely possible, right? So, and as portfolio manager of BlackRock Flexible Income ETF, Reader said he's targeting a yield of just under 7%. The rise in interest rates over the past year has made it possible to target such a yield in debt markets with less risk taking than what would have been needed at the end of 2021. So in other words, they're able to earn more money in this higher interest rate environment thanks to the Fed. They're ready to deploy capital. They're just waiting for that key indicator, right? He said he plans to invest opportunistically, including in areas harder for many investors to reach in complex fixed income markets, such as exposures to mortgages and collateralized loan obligations. Guys, I hope you're seeing the signs. These are the warning signs. They're letting you know what is likely to be coming down the pipeline. It's time to prepare for what is coming. Don't ignore the warning signs. He says, in his view, the economy is in better shape than many people give it credit for at this stage of the cycle. While growth is slowing, Reader said he doesn't see a deep recession. He doesn't see a deep recession impending, citing a low unemployment rate, wage growth, and excess savings in the economy. Now, don't get me wrong, guys. I'm not saying everybody's got excess savings. Some people are doing better than others. And that's always going to be the case. Some people are just going to do better than others. Not everyone's going to get straight A's in school. Some people are going to get, B's, C's, and barely pass with some D's, And the same when it comes to our finances. Some people will have more money in savings. It's just plain and simple. Some people have a better handle of their finances. They may have higher income. They may budget better. They may live a little bit more frugally. Maybe their income's just really, really strong. Maybe they're investing more. Maybe they have more income coming in through passive income sources like dividends, side hustles, online businesses, maybe stock options or 401k distributions. Who knows where they're getting their income from? But everyone has set up their finances their own way. So when he says that there's a lot more people carrying high balances or higher balances in their savings account, that's a sign that people they're preparing for the worst. But here's the thing, and we talked about this a lot in our channel. When you prepare for the worst, if the worst doesn't happen, well, guess what? You're in a great position to take advantage of the wealth transfer. Always be looking out for deals on assets. I'm always looking out for deals on assets, and I'm always looking to increase my income. And I think many of you guys are too, based on the comments that I'm receiving. He also anticipates that the Federal Reserve may pause its interest rate hikes at its next policy meeting as inflation has been easing, even if it remains sticky in core services. The Federal Reserve has aggressively raised interest rates over the past year in a bid to bring down the high inflation. He said he thinks we're reaching the end of the process. So basically, a key representative within BlackRock believes that we may be done with these interest rate hikes. Now, he's not saying that this is necessarily the last interest rate hike that the Fed will release, but we're getting toward the end of the cycle. Now, what we've seen when it comes to interest rate hikes from the Fed, generally, historically speaking, when you raise interest rates, you slow down the economy. Well, here's the thing. The stock market is very forward-looking. ETFs, index funds, stocks, the moment they get the whiff that the Fed is done raising interest rates, the moment that's confirmed, maybe even prior to that confirmation, people are going to jump out the gate, start deploying capital. They're going to pull cash out of their bank accounts and start deploying that capital into the markets. They're going to be buying up real estate, stocks, cars, boats, assets of all classes. Get ready, folks. Get ready. BlackRock's getting ready. The Fed's getting ready. And like I said, BlackRock is in control of trillions and trillions of dollars, right? So you got to think about it. We as humans are influenced by our peers. When your neighbor goes out and get a new car, you normally take notice. You might look up that car on the internet, see how much it costs, if you liked it or not. Maybe you start looking in to get one. Maybe you start seeing more of those on the road. If you got a new car, chances are your friends or family will probably, compliment you on your new car purchase, and possibly even start showing an interest in getting a new car like yours in the future. We are influenced by our peers, whether we want to admit it or not. So if BlackRock starts buying in, what do you think all these other investors are going to do? They're not going to just ignore what BlackRock's doing. It's not going to happen, guys. So drop me some comments down below. Let me know what you guys are thinking. Let me know what you guys are preparing to do in the next several months in terms of your investments and overall preparation for surviving and thriving in this economy. If you guys want more information on increasing your income streams through passive income, side hustles, building online businesses, and the like, not to mention investments in real estate and in the stock market, definitely drop me some comments down below. Be sure to share this video with everyone you know. Subscribe to the channel, drop a like, and I'll see you guys on the next one.